Thousands of Indian businesses are out there trading across the globe, but they all face this hidden danger. So today, we're going to pull back the curtain on the invisible shield that protects them, the ECGC, the Export Credit Guarantee Corporation. Let's dive in and find out what makes it so absolutely vital for India's economy.
Okay, just picture this for a second. You've worked for months. You've finally shipped a massive order. We're talking 50 lakh rupees worth of goods to a buyer overseas. Everything's great, but then bam. Before you get paid, that country is thrown into total chaos by a military coup. Or your buyer just goes belly up, suddenly bankrupt. Boof. Gone. The massive payment you were banking on vanished. So, who pays you now? This isn't just some classroom question. It's the high-stakes, nail-biting reality of international trade.
So how on earth do you deal with that kind of risk? Well, that's exactly what we're here to break down. We're going to start with the high-stakes game of exporting itself. Then we'll introduce India's secret weapon, its export shield, the ECGC. We'll see exactly how it protects you, but we'll also get real about its limits. Then we'll look at some of its recent victories, and finally take a peek at what's next for this incredible safety net.
All right, let's dive right in. Section 1, Exporting's High-Stakes Game. We're going to talk about the two absolute core risks that every single business faces when they decide to sell their goods abroad.
When you really boil it all down, the incredible complexity of global trade creates two giant headaches for exporters. First, the most obvious one, the risk that you just don't get paid. Your buyer is thousands of miles away. What happens if they go bankrupt or just disappear? And second, and this is a huge one, is just getting the money to make your stuff in the first place. Banks look at that risk of non-payment and they get, really nervous. That makes it super hard to get the loans you need. I mean, that's a 1-2 punch that can knock a business out before it even gets started.
Okay, so things look pretty grim, right? But what if there was a shield against all this? That brings us to our next section, India's Export Guarantee Shield, where we finally get to meet the hero of our story, the ECG. So, what is this ECGC? It stands for the Export Credit Guarantee Corporation of India, and it's a government enterprise with a super clear mission to pump up India's exports. And how does it do that? By protecting companies from those scary payment risks we just talked about, and this part is absolutely crucial, by helping them get the loans they need from banks. Think of it like this. It's basically an insurance company, but its one and only job is to have the backs of Indian exporters. And look, this isn't some brand new, unproven thing. The ECGC has been around since 1957. It started out as the Export Risk Insurance Corporation. It's headquartered in Mumbai and operates right under the Ministry of Commerce and Industry. So you've got this long history, plus it's backed by the government. That gives it some serious weight on the world stage, Okay, so we know what it is, but how does this shield actually work? How does it protect you out there in the wild? In this section, we're going to break down exactly how it defends you against the two big bads, commercial risks and political risks. The ECGC is like your personal bodyguard, fighting on two different fronts. On one side, you have commercial risks. These are problems that are specific to your buyer, like them going bankrupt. On the other side, you've got political risks, which are the bigger, scarier problems related to the buyer's entire country. Think war or sudden government bans. Now, here's the key number. The ECGC will typically cover 80 to 90% of your loss. That's a huge safety net. Let's make this really concrete. So picture this. Your buyer goes bankrupt. That's a classic commercial risk. Boom, you're covered. Or let's say they don't go bankrupt, but they just drag their feet on payment for a really, really long time. It's called protracted default. You're covered for that too. Now for the political stuff. If a war or revolution suddenly erupts in their country and it's impossible to get the money out, you're covered. Or what if their government just decides overnight to ban imports of your product after you've already shipped it? Yep, you're covered. It's a pretty amazing shield. All right, but let's be real. No shield is perfect, right? Every superhero has their kryptonite. So to really understand how this works, you have to know its limits. And that brings us to Section 4, where we look at what the ECGC shield can't block. So what are these limits? We've talked about what's covered, bankruptcy, war, all that stuff. But what's not covered is probably even more important to understand. And the big one is this. ECGC will not get involved in commercial or quality disputes. So if your buyer refuses to pay because they claim your goods were faulty, ECGC isn't going to step in. It also doesn't cover you if you lose money just because the exchange rate changed. Let me say that again because it's super important. ECGC covers you if your buyer can't pay. It does not cover you if they won't pay, because you're in an argument about the product. That's a you and them problem.
Okay, all this theory is great, but where's the proof? Does this thing actually work in the real world? Well, let's look at the numbers. Section 5 is all about the Shield's recent victories, with some powerful stats from the 2024-25 fiscal year.
Just take a look at this number, 8.55 lakh crore rupees. I mean, just let that sink in for a second. That is the staggering, mind-boggling value of exports that the ECGC supported in just one single year. This shows you right away, this isn't some niche little program. It is a fundamental pillar of India's entire export economy.
And here's the kicker. It's not slowing down. The value of exports it's backing jumped by 17% compared to the year before. That kind of explosive growth tells you something really important. It shows that in today's kind of crazy and uncertain global market, more and more businesses are realizing they absolutely need this protection to trade with confidence.
But for me, this next number is the one that really hits home. 453 crore rupees. That's how much ECGC actually paid out in claims to exporters last year. This isn't theoretical value. This is cold, hard cash. That's 453 crore rupees that went right back into the pockets of Indian businesses who, without this shield, would have faced absolutely devastating losses. That's the shield in action.
So yeah, the system is clearly working, and it's working well. But you know how it is. The world keeps changing, and the challenges just get bigger and more complex. So for our final section, let's look ahead. Let's see how this shield is being upgraded to face the challenges of tomorrow. The good news is ECGC isn't just sitting still. It's constantly upgrading its armor, so to speak. For example, they're boosting bank cover up to 90% for small businesses, which is going to make it way easier for them to get loans. They've also rolled out schemes like NRVIK, which is a fancy way of saying it helps you get cheaper loans from the bank. And there's more coming down the pipeline, with new government programs that are going to offer 100% collateral-free credit guarantees. The whole system is just getting stronger. All right, let's do a super quick rundown of everything we've talked about. The ECGC in a nutshell. What's its goal? To protect exporters from payment risks. Simple. How much does it cover? A solid 80 to 90% of loss. What kind of risks? Commercial stuff like your buyer going broke, and political stuff like a war breaking out. What's not covered? And this is the big one, quality disputes and currency swings. And its impact? Well, it backed 8.55 lakh crores of Indian exports just last year. Pretty powerful stuff. Which brings us right back to the million-dollar question. Well, maybe the 50 lakh rupee question. Let's say it happens. A foreign buyer refuses to pay you. Not because they can't, but because they claim your goods are defective. Will ECGC cover your loss? And really, the answer to that question is the one thing you absolutely have to take away from all this. It's the key to understanding this powerful but very specific shield.